How to trade Bitcoin mean reversions. That's right. How to trade Bitcoin mean reversions. That is the topic of the day on this fine, wet day of trading the digital asset. So, if you know anything about the VEPS or the VEPS, as we call them, it is incumbent. It is, well, if you know about trading the VEPS, you'll know that one of the greatest, most awesome indicators in the alpha trading tool suite is the power mean. The power mean has a ribbon of different lengths of means, and it shows you whether or not the asset is moving away from the power mean or returning to the power mean of any given length. And when it's extremely high above, far beyond above the power mean, the asset will revert towards other areas, usually down towards, at some point, typically it will hit the reverse wave trend, where there will usually be other power means around there that it will target. And that returns, positive returns beget positive returns until they don't, and negative returns beget negative returns until they don't. What does that mean? Well, it means that as long as an asset is moving away from the mean, whether up, down, or sideways, it's typically going to continue to do so until it doesn't. Wow, really insightful, right? You might think that's very obvious. How is that useful for trading? Well, it means if you start to have a move that you can see on returns oscillator as a divergence play or something like that, that typically you will have a move in play until the move is over. How will you know the move is over? When the divergence ends. When the divergence move ends. And the equilibrium is returned to the force. How will you know when that's the case? Well, you'll see it in the way that the returns are moving. Right? They'll be more in sync with what is happening, and the move will end, and you'll have very often a divergence play will yield a couple standard deviations or more on the returns. At that point, maybe it'll do a few of those candles where the standard deviations will be 2 or 3 or more standard deviations on the candle of the returns. And at that point, it's usually a good place to take profit, because returns mean revert, right? So at that point, you have diminishing returns once it's gone up or down a lot in the direction that you're trading. At that point, you may as well take profit, because yes, you might miss out on a little bit at the end of the move, but it's better, again, to have more capital in hand for your next trade than to just sit in the trade on an asset that could easily mean revert on you and eat up all your profits if it goes in the direction against your trade. Now, how else can you trade mean reversions? Well, it just so happens that one of the best tools in the alpha trading suite that works incredibly well with the UPM is the projection boss. Ooh, the projection boss, powerful tool. What can that tell you? Well, the projection boss can show you the distributions of the normal distribution or the Laplace distribution set on any candle. And you can have it running with drift on or no drift on. Drift on or off. What is drift? Drift is the natural tendency of a market asset to drift upwards over time. It is extremely useful on very high time frames, since the natural tendency is over higher time frames that an asset will drift up. Is it useful on low time frames? Some people like it, some people don't. Personally, I use it for monitoring higher time frame drifts and not so much for lower time frame. Because if you're trading like the 1 minute, drift on a higher time frame doesn't really matter. But there are definitely people who swear by it even on low time frames, and it works perfectly fine, and you can definitely use it for that. In any case, the projection boss, there's two versions of them, 1 and 2, are very powerful tools for looking at where the assets are moving through the distribution models set on specific points. And the specific points that I've found are best, that we at the co-founders of Alpha Trading typically tend to use, is reversal candles. And if you don't know what a reversal candle is, come into the Alpha Trading Discord, we'll explain it to you. But a proper reversal candle is where you should put those distribution points. Now, and will you say, call it a pivoter? No, it's a proper reversal candle. Anyway, that is the second of the 3 incredibly powerful tools to use to trade mean reversions. Why is the projection boss useful to trade mean reversions? Because the projection boss allows you to see how the asset is moving again through the distribution. So you can see the targets: 68.2 probability, 95.5 probability, 99.7 probability, 99.9999 probability, and so on. And you can set specific probabilities, obviously, that are not those numbers, and there are plenty of presets that you can use if you want. There's no shortage of in a very custom way. We just tend to use, well, anyway. So that's the second, of course, the Alpha Trading RMLR. Now why the Alpha Trading RMLR? What is the Alpha Trading RMLR? Once again, if you don't know, I will tell you. The RMLR stands for the reverse mean of logged returns. RMLR. So the Alpha Trading RMLR lets you, with very pinpoint accuracy, like a laser beam into the future, lets you see into the future what will be the direction of the future RMLR. It also shows you the current one, and historically it shows you the past RMLR. But it is extremely useful for knowing the future direction of the RMLR on any given length that you set it. So if you look at the Bitcoin daily time frame, for example, and you see the 3012 RMLR on your chart, you'll notice that yesterday was the second day in a row that Bitcoin did not hit the third standard deviation up band, meaning the third standard deviation band to the upside of the 3012 RMLR. So what, you ask? Well, when an asset does not hit, I should say, once an asset stops hitting a third standard deviation band to the upside or the downside, after having made a move in which it did hit that band, right? Then the asset, after 2 candles being confirmed of not hitting that band, then the asset is in mean reversion with a higher than 99% probability. What do you mean? Again, when the asset makes a move, as it did over the past 10 days or so, and you saw Bitcoin, for the past week, it's been running very nicely. Been just moving up and up and up. right? More than 20% or something like that, which is significant for a coin of that price. Although price doesn't matter, returns do. Still, it's significant, right? When you see the asset moving through the distribution models as it has, and please notice the distribution models on the day, since it started moving up in the last couple of weeks, you'll notice that it's been hitting the third standard deviation band to the upside of the 30-12 RMLR for like most of the last week. Then suddenly, not suddenly, but suddenly, it stopped hitting that third band to the upside 2 days ago, meaning it had hit it enough times, right? It hit that band enough times. Well, there's no such thing as enough, but it hit the band the amount of times it was going to hit it, and it stopped hitting it 3 days ago. And then 2 days ago, it did not hit that band. And yesterday, it did not hit that band. And today so far, it sure hasn't hit that band, and that is because after 2 candles of not hitting that band, it is pretty much confirmed to be in mean reversion. Now, does that mean that it is impossible for the asset to pump up to like 55.5 or whatever, 56 now, I think it's like 56.2, where the third standard deviation band to the upside is currently? 56.2, 56.3, somewhere in that area? Of course, it's not impossible. It's just that the probabilities are well above 99% that it will revert to the 30-12 RMLR before it hits that third standard deviation band to the upside again. Now, can the move happen to the downside very easily and just be a simple short trade from where it is down to where it hits it? Possible. Yes, of course it can. Can the move happen mostly sideways, where we'll run into it at some point in March? Yeah, absolutely, it can. Can the move be to largely the upside, where it will eventually run into the RMLR at some point in the future to the upside, but not hit the third standard deviation band to the upside along the way? And the answer to that is yes, absolutely, it can be. Not only that, we see it regularly that mean reversions happen on continuation moves. Now, is that the propensity of them? No, it's not. It's a minority, but it's not an insignificant minority. Nevertheless, you absolutely can keep an eye on that third standard deviation band to the upside and on that RMLR, and know that the range of trading will not exceed the point of the third RMLR band to the upside, the third standard deviation RMLR band to the upside, until it hits the actual RMLR band with an extremely high rate of certainty. Again, well over 99%. How do we know it's well over 99%? We've measured it on tons of assets, tons of asset classes, all different time frames. We've done the work. There's no reason that we wouldn't, because we actually use this indicator for the purpose of actually running trades. We wouldn't use these indicators if they didn't work, unlike so many shillionaires who will sell you absolute garbage and tell you that they use it, but they don't actually. We actually use our indicators to trade. And if we didn't, we simply wouldn't push them out and make them available to anyone. Right? If we found that reading French toast, trying to look for symbology in French toast was more useful for trading, we would do that. Right? There's a reason we don't use garbage lagging indicators. It's because statistically they don't work. They're garbage tools. They're for suckers. And when I say suckers, I mean people who've been misled, misinformed. Okay? And that's why we don't use that stuff. If you want to learn how to see literally into the future with the RMLR and how to actually trade mean reversions, right? Well, those are 3 very powerful tools, and you can get them at Alpha Trading. But first, before you do that, you have to learn the basics of trading volatility, probability, statistics. Again, you can get that for free at Alpha Trading. Just go to alphatradinghq.com/discord. That'll get you right into the Discord. It's free to join the public channels. You'll get access to all kinds of things. Education for indicators that we will literally give you free access to if you just open a support ticket and ask for access to that. We will give you access to the live streams where you can literally participate in the live streams. You know, it's just not a one-way, top-down kind of thing. We're not like YouTube Jimmy. We don't care about that kind of nonsense. We're here to help traders learn how to actually trade. So check it out, alphatradinghq.com/discord. And also, we are now live streaming on Rumble. So if you like Rumble, and if you don't like the fact that we are basically muted on YouTube because they hate that our content gets out there, because they don't want people to know this stuff, and we have actual evidence to demonstrate that, then by all means, check us out on Rumble. Look for Alpha Trading HQ or the Alpha Trading channel. You'll see our live streams typically start at 9 a.m. US Eastern Time. And yeah, that is it. So, Monday through Friday is typically when they run. On that note, happy trading.